trends now, we're moving to rentals. So according to the URA data, again, rentals fell by 1.2% in Q2. That's a turnaround from the 1.1% increase in the first quarter. I suppose that suggests a bit of a weakening in terms of rentals. Landlord more willing to negotiate on asking prices on the ground. Norris, you've earlier said that it's again very selective. What are some of the properties that tend to see more rental resilience?
I think with property that near international schools, near the central business district, tends to have more resilience, because those are really what aspects are going after. In Serangoon, you have the Stanford International Schools, Stanford American Schools, Australian International Schools. Those are the places where you will get a lot of Australian and American tenants. It tends to be able to lease out quite easily. So you have property there. I wouldn't see much of an issue. Selectively, like what Ismail says, some places will be easier to rent, and also the rent will probably hold up. Those places are not really meant for rental. You don't really have a catchment of expats or people who are working around there who need to rent. Then it will be a bit more challenging. Yeah.
Okay, I mean, if I add on, I think I agree with most viewers' concern about it will weaken. They are not wrong. Actually, it's quite spot on. Why would I say that? Sometimes to an extent, it is also sentiment driven. Put it this way. If I am a landlord renting it out, even in a smaller apartment of mine at $3,000, and knowing that I need to service my bank, and if my good tenant who has been there for the last 2 years and come back and ask me, hi, Mr. Ismail, would you be able to consider a 2008 or 2009? From a landlord perspective, what do I start thinking? Just if I don't drop by just a 3%, just in $100, $200, if I say no, finding another tenant, it incurs me additional cost of having to touch up the place, having to pay the wait out period to find a new tenant. It may end up being vacant for 1 month and I lose that 1 month rental. I prefer the continuity. And therefore, most landlords in the current sentiment and the market climate, when the tenant wants to renew, are more willing to give on a goodwill basis because of the continuity and a support marginal discounts. And on that basis, I don't expect the rental index to go up for the rest of the year. But how much lower it will nosedive, one don't even expect it to be huge. But from what it happened from the first half to second half, it is almost back to square one. The year ended with 104.5. Right now we are 104.3. Yep. But I will not be surprised if for the second half it may further go down by another 1 to 1.5% point.
So actually, if we look at the rentals by district, again, that slight easing from Q1 to Q2 in terms of the change in the median rent. So mostly we see a single plus digit type of drop, except District 6, which stood out. And Norris, we were talking about this earlier. It's basically skewed by certain transactions, isn't it?
Yeah, it's skewed by one particular apartments at High Street Centre. So that is one single owner who actually convert all his apartments into like a service apartment kind of arrangement. So it's a very modern, renovated, fully furnished with service apartment amenities. So you just take your luggage and go in, and the rent is much higher as compared to those normal 1 or 2 bedroom property around the area. So it is not comparable to the usual rental that we do. This is more like a service apartment rates. Yeah.
So I will discount that, because it is not that there was a sudden surge on a demand, but the landlord has value added that people were willing to pay for that. But generally, when we look at it, yes, it's in a single digit. Some the district is on the extreme first column. If you say District 1, and surprisingly, you see like places like District 10 is holding relatively well. District 9, the drop is so marginal, not even 1%. And that's why sometimes the location. I think, do we have another more district?
Yes. We have the rest of the district.
Yeah.
In you see 27 and actually 22, I believe, booking very marginal gains.
Hmm. Yeah.
But by and large, we're still again looking at a very marginal downtrend throughout from first quarter to second quarter, which sort of is in line with the URA's benchmark for Q2.
Yeah. That's understandable. Yeah.
So
This good. Okay, so just for the glimpse earlier part, sorry, last week.
Yeah.
I think I think because I think some of the viewers, I think we have got more than 100. If you are actually a bit, even if you want to take a screenshot of this, you know what are we talking about the various district, yeah, from district 1 to district 8. Just now district 6 is where he said was the high street area. Yeah.
yes,
Other than
yes.
that, you can see all other places. Okay, thank you. Yeah, sorry to just cut it.
Yes, and the one that got a marginal gain was 22, that's Jurong, and also 27, Yishun, Sembawang area. So we're just going to move to the second section of the presentation, essentially looking again at some of the factors that we touched on earlier. The key determining factors, I think, for not just the leasing market, but for many, real estate sectors as well. I think it has to do with the COVID-19 management, whether there's a resurgence in cases. We've seen resurgence in numerous places, Australia, New Zealand, Hong Kong, more recently in South Korea. So the COVID-19 management remains a key issue. Economic outlook as well, how the Singapore economy is going to perform. It looks like it's going to be a very long road to recovery. Business sentiment and job market outlook will be key as well. And the final point would be the upcoming supply of units and also projected completion. And we've got to factor in the age of the property, among other factors. So looking at supply, this is actually a slide on the non-landed available stock and vacancy rate. Again, the available stock has been fairly consistent and the vacancy rate actually hasn't gone up by much. It's actually been quite flat from Q1 to Q2 at 5.6. If we look at the landed property, again, very limited supply. We're looking at 73,400 plus units. And this hasn't actually gone up very much. If you look at the Q1 2014, that's 71,000. So limited land supply, and that should lend some support to rentals. Vacancy rate obviously is a bit lower. Just want to bring in maybe Norris to talk us through some of these numbers out here. Vacancy rate for landed properties tend to be lower. I suppose a lot of these properties are owner-occupier.
Yeah,
They're very limited stock out for rental, right?
Yeah, usually is owner-occupied for landed properties, and not many are available for rent. And when those are available for rent, tends to be able to rent it out, because some aspects, when they're looking for landed property, they will just focus just only on landed property. They will not consider apartments at all. So it's kind of like niche, and Singapore, we know that the landed property also pretty limited. So that's why vacancy rates tends to be low. But of course, over the last couple of years, if you look at 2014, the vacancy rate went up. I guess there are some new landed property come available in the market, those some cluster houses. Though some of the cluster houses actually facing some difficulties to rent out because of the layout, because of the location. Yeah.
If we look at the vacancy rate and available stock by region, Ismail, I think this one we were discussing earlier as well. OCR has a majority of the stock in terms of a private home, 186,000. Looking at OCR as a sector, it's also largely owner-occupier type of profile. So looking at CCR, RCR, and OCR, what's your take in terms of the demand going forward? Do you see a lot of take up for OCR rental?
I mean, looking at it generally, a lot of numbers here. I think this is one slide in all my presentation with huge number of numbers. Yeah, But I think it's interesting, not to be thrown off by the numbers. What this slide we are trying to illustrate actually, Swing, if you can just help me to go 2 slides earlier, to just put in perspective, that the slide that we are going to talk is a breakdown of this. Total we are talking about here is this 301,296 is overall the non-landed. And then we go to the actual slide that we are talking here, and where do they come from, the 301,000? And that's, again, we are talking about the CCR, RCR, OCR, because in Singapore, in any investment, it goes by the region in terms of demand, supply, and the rental amount, and as well as the rental yield. So, and then when we look at it, if you take the base starting from 2014 to now, over the last 6 years, the CCR from almost about 70,000, it has gone up to 82, less than 20% growth in terms of the volume of numbers. But then when we look at it from same thing again, you look at RCR, almost close to 90,000, 87, 88,000 to 106, I think is barely about 15% growth. But on the other hand, the OCR from 137 to 186 is an increase of almost another 50,000 and easily well above 35% over growth in terms of numbers. So, but the interesting thing here is this, even though the numbers of OCR has increased hugely, we also know OCR generally tend to be owner occupied, similar to the landed properties, because this is where a lot of HDB owners come in and stay, upgrade and have a lifestyle. But on the other hand, one need not worry that OCR properties cannot be rented out. We must understand. I think there's some subsequent slides we will show you the S-Pass, the work permit, and so on. Not every tenant is an expat. Yep. I mean, we don't expect an expat to be staying or trying to lease in most of the outlying areas. We still have got a very strong numbers of workforce, PMETs, and professionals, engineers, and managers, and all other group of people. And you know, some of these people do rent even in the OCR, the entire apartment or a condominium unit, and share it among 3 people or 4 people within the allowable limits. And that's where the demand is still strong. Therefore, I think the vacancy rate is not expected to increase as earlier we predicted, and most areas will have a strong demand.
Thank you, Ismail. Now, having looked at the rentals, having looked at the stock, I think we want to address some of the points that we raised earlier on, if you recall, the factors that could potentially influence leasing market. So we'll go into the next slide, which talks about the supply of upcoming condos as well. Looking at second half of 2020, as we mentioned earlier, there's not a whole lot of supply. But the next few years, 2021 to 2023, there would be a lot more coming on stream. So if you're renting out a unit, for example, if you see you know, a few projects in the neighborhood that's going to TOP very soon, that could have implication on rentals for your unit. Maybe I want to bring in Norris here. Norris.
Yes.
We had a chat the other day, and we were talking about the age of property. So most people would want to lease newer TOP projects, given, you know, newer facilities, newer buildings. If you have an aging property, how do you ensure you can still fetch decent rents? What could you do?
If you do have an aging property, I guess the thing to do is to do a simple renovation. But the renovation, you need not to renovate the whole apartments. Usually, you just need to renovate the kitchens and the bathroom to make it modernized. The rest, you should look good, especially if you are just doing a partially furnished apartments and just add on a brand new curtain maybe. The apartment should look as modern as good. No need to change the flooring, no need to do any special deco. I have seen many landlords just do a simple renovation to the kitchens and to the bathroom, and they can fetch as good rent as those that maybe even compared to the newer one, because the older condo are bigger and some have larger condo site. The site are bigger, they have large pool, they have some even have tennis court, which is pretty rare now. So these are also what can draw the tenant to you for this type of older apartments.
Thank you.
Yeah.
Looking at the economy next, so we've lined up the GDP chart with home leasing volume, which we saw earlier. Looking at the leasing volume, again, we've seen that steady increase that we talked about earlier. I suppose looking at the, say, 2001, during the dot-com bust, we see a minus 1.1 in terms of GDP, but the leasing volume actually still held up fairly decently. I mean, it didn't collapse. And same case in the 2008, 2009 global financial crisis. Again, leasing held up. But obviously, we want to point out that this is a very different crisis compared to whether it's the SARS or whether it's the global financial crisis, because it's there's just no playbook. No one knows what's going to happen with COVID-19, and it could play out for a while. So I suppose because of this uncertainty, Ismail, there's no telling how the market will behave, isn't it?
I think obviously the greatest fear, and I think nobody is learned enough to very certainly predict in certainty how this will pan out. But on the other hand, if you look at it historically, almost every crisis over time been resolved. So what are we trying to say here is this: as long as we have find a vaccination or a cure for this full term, things will come back to normal. And during this short period of, let's say, 1 more year, will things nosedive? I don't really think so. Reason being, you must understand, most of the rentals are locked in over a 1 year, 2 year contract. So they don't expire immediately, and the existing tenants have got commitments and liabilities. Unless, of course, the company closed down and they are being asked to leave. Again, then, the most tenancy agreement do not allow terminations without giving advance notice or to pay the penalty unless they exercise diplomatic clause that are provided for. So that being the case, in a short term, I think the leasing market is going to be relatively stable with some marginal correction. One of the other thing here is this: with all the fear of the pandemic, I'm not trying to portray a very optimistic view, but neither do I want to grade with huge amount of pessimism. My view here is this: we have to be cautious. In a nutshell, I do expect some people losing the job. I do expect the new norm where people may need not come to office or maybe even operating from overseas. I'm not so sure whether there is a lesser number of inflow of people that requires accommodation. But beyond that, I look at the other crises. Look at the world trade conflict between America and China. Look at some of the other tensions in Hong Kong, right now in Thailand and elsewhere. What does it mean, Singapore as a hub? MNCs and offices choosing Singapore as a more stable environment, as a country, will help us to grow the businesses. And Singapore have been proven as the most competitive as far as a business startup and as well as relocations of many of the MNCs. So there is also the other side of it. When some of these crises are being cleared and the ban on the restrictions, we may benefit of a little bit more of the growth of the demand of foreign people coming to take up spaces in many of these places. Yeah. So I'm just giving it a complete macro perspective on the both angles. Things are not completely bad, but on the other hand, there are some that we need to wait and watch and see.
Thank you, Ismail. And I think in the next few slides, we'll just look at some supporting factors actually for that could prop up the market for lease in terms of leasing demand. Again, earlier, Ismail talked about the total population in Singapore. So over the last few years, it's actually been steadily rising. We're at 5.7 million. Out of that 5.7 million, in terms of resident population, we have about 4 million, and that includes Singaporeans and Singapore PR. So with family formation, there will be need for housing, there will be need at some stage for rental as well. I think Ismail spoke about the labor force. So this is actually the chart we plucked out featuring employment pass holders. They've actually been fairly steady on the upward trend trajectory. We closed 2019 with 193,000 EP pass holders. We selected EP pass holders because these typically include your PMETs, professionals, managers who would likely be out in the market for leasing of private homes. So we extracted actually those numbers from this chart here, and this chart, again, a lot of numbers. I'm just gonna let it sit there for a while. And then I'll bring Ismail in. Ismail, again, talking about the demand from Singaporeans, demand from foreigners. Do you also sort of see a bit more leasing demand from companies, especially amid the pandemic, to house their workers as well during this stage?
Yeah, I think, in fact, we realized that immediately during the circuit breaker, there will be huge amount of demand, and corporations and people were speaking to us, because those people who are working, and there's some people who are just traveling through and forth to Malaysia, and they've all been confined because of the travel ban, and they were all looking for places. And we have to help some of these companies to even find hotel accommodations to house them for that short period of time. But these are just temporary measures. So this is not something that is in a long-term demand. But even looking at it from here, the employment pass, 193,700 of them, and as well as the S pass, the 200,000. So we have almost got about close to 400,000, which is a good 8% of the 5.7 million populations that we are talking about. And the difference here is this: most of the employment pass and the S pass holders, they do come, and unlike in a family, either some of them want the privacy, having a smaller 1-bedroom all for themselves, depending on the budget. Some of them tend to share 2 or 3 or 4, depending on the budget again. And that's where I look at it, generally speaking. In Singapore, we cannot not have these people overnight. Somebody will have to do that job and that skill sets. I know there's been a huge amount of concern, but it is just that the Singaporean strength may not be able to immediately. Even maybe over time, more Singaporean may take up some of these jobs. Therefore, I don't see a stress level of not having enough. And the number have been steadily increasing. If you look at the total foreign workforce as of last year, is 1.427 million. Yeah, and that's the demand. That's where the demand comes from.
Norris, I think you've also seen companies coming in asking for leasing. You've seen more of that coming through in recent weeks, haven't you?
Yeah, I mean, recent week, what we saw are companies who actually given the green pass for their Malaysian worker to come over to Singapore. So these are just temporarily leases as well. So they are looking like 3 months, 6 months. The longest is 1 year, just to wait to all these are over when things can go back to normal, like the past when their worker can just travel back and forth from JB to Singapore. But right now they can't do it. They need to find accommodation for their worker. So we see a spike in this request. So, but they are looking more in terms of like a 3-6 month, like what I say, and also more towards the HDB leasing. So in the last few weeks and till now, HDB leasing is pretty active, and landlord is increasing the rent because of it.
Thank you. So looking at, again, back to COVID-19's impact on the leasing market. I think I've listed a few points here that reflect some anxieties on the ground as well. Particularly, you know, the last point about construction delays. We're not really seeing a lot more leasing demand because of construction's delay on the ground. Have you seen more of that?
Construction delay, I don't see it directly affect the leasing. Yeah.
No, but on the other hand, we have, you know, not hugely, so it's not a significant numbers. We have got a couple of our clients. I just also spoke to two of them yesterday. They are in fact currently, they sold their apartments and they bought a landed property, and the landed property was under construction. And unfortunately was all due to complete by actually in May and June. But because of all the restriction order on the construction sector, things has delayed for another 3 months to 6 months. So those people who are in the transition, who just wanted to lease, and they all have to further extend their existing lease. But not huge significant numbers, but that is again creating a little demand on the rental side.